Before we get started, I just want to make a reminder to everybody that the information discussed today is not to be interpreted or construed as investment advice. Everyone's financial situation, goals, and objectives are different. Please consult investment advice.
The dirty secret is that no one's ever going to get paid back.
People have the shortest memories when it comes to investment.
We just got to get Keith into Bitcoin.
Hey, there's a bubble.
Welcome back to the Loonie Hour, episode 20. As always, joined by the three amigos. We've got Rich Diaz, the Tom Brady of macro with Acorn Macro Consulting. And then we've got everyone's favorite boomer in his dress shirt today, Keith Dicker with IceCap Asset Management. Keith has got some fan mail. We got a new box of Twinkies in the mail. So thanks, Keith and Bessie, for sending that over. Keith, there's a lot of people demanding that you inhale a Twinkie after that call on the whole Russia-Ukraine spat, and obviously big news today as we're recording this yesterday. The invasion has officially begun, so there's a lot to sort of discuss on that front, and I think it's important to preface that while we certainly hope to entertain you all and have a good dialogue here, that we are not geopolitical strategists, and trying to figure out all the ins and outs of what's going to happen here is anyone's guess. And so let's take it easy on Keith here. But Rich or Keith, I don't know if either of you want to take it off. Keith, do you want to have any defense here to start things off? Your kind of views, any updates on how you're looking at the situation right now?
So first of all, though, Keaton, Bessie, thank you. So you guys know we have our first corporate sponsor. Every now and then we do bets on the Loonie Hour. And I think Rich has won 18 of them in a row. He's pretty good at it. But Keaton from out in Vancouver sent us this real nice box of Twinkies. So he's now the official sponsor. We'll have more bets coming up. And let everyone know the new bets for, the new prize for new bets coming up. We're kind of thinking about trips to Hawaii and stuff like that. So any other sponsors line up. It's great. Okay, let's go into a lot of this stuff though. And first of all, just preface, when I explain things and views, it's not because of any lack of being insensitive about anything. It's really just being objective, and we'll talk about that when it comes to managing money. And it's so I've seen this so many times now over the years, and it's been a lot of years for me. And what I'm about to say, just stop and think about it. And you'll say, yeah, it doesn't seem right, but it is right. Everybody buys at the top and sells at the low. And I can go through so many crisis events over the years, whether it's, aspects for war or anything else. Everyone is selling, when they shouldn't be, and they're buying when they shouldn't be. So a recent example last year with, all the cryptomania and the ARK funds out there, everyone's buying this stuff at the top, and now the stuff is down to pretty low levels, and people are selling today, right? And they shouldn't be. You should be doing the exact opposite.
Exactly.
So when we do things, so for example, for IceCap right now, today, we're actually selling agricultural commodities, and we are selling volatility. So everyone out there is lined up, doing the opposite today. So if you're in the business of managing money, you really have to show zero emotion. And sometimes it can come across as being a bit insensitive towards what's happening behind the scenes. Because we know it's not a lot of fun right now, especially for what's happening around the world. But we're going to go into a big conversation about that. And we'll go through our views on how it's going to play out. And in our mind, it's still going down that same road. And this is a really interesting road where it's going. But I'll jump back into that as we get going. Maybe Rich or Steve want to carry on next before we go back and do more of the Ukraine stuff?
I wanted to just say something more about touching on how you sort of perceive, maybe stepping back a little bit as to what I try to do, which is, well, rather than worry about being right or wrong, I think that's sort of like a very short-term shallow sort of assessment of your analysis. I think what's more interesting and more important for me, and I think for Keith as well, is understanding the risks and understanding what you think is the probability distribution of something occurring, and whether or not you've sort of gotten that probability distribution right, and then assessing the sort of the risk reward to that. So just because if you're take a, forgive this example, it's the Super Bowl, Tom Brady's down by 21 points, betting, on the, betting on the team that's up by, 30 or 40 points with, 20 minutes left in the game, just because you got that bet wrong in the end, didn't mean that was the wrong decision. And I think it's important that when we kind of analyze either stocks or bonds or political outcomes, that frankly, no one really can tell what's going to happen in the future. But I think that's the way I sort of try to weigh outcomes and weigh potential trades. It's sort of a risk reward. We told our clients, we thought that buying Russian equities was a good tactical trade, and we were wrong, but we thought we stand by our decision and how we came to that view. And so I think it's just kind of, rather than focus on being right or wrong, I think it's more about how you get to that conclusion.
Well, let's give you a little bit of daps here. You've had some pretty good calls as well. I mean, obviously you've been extremely bullish oil.
Yeah, fair enough. But
I
don't know. I think I want to defend my boy. Basically, I want to defend my boy Keith. He's getting. Yeah.
Oh,
so
I mean,
Keith doesn't need any defending, by the way.
You're a boomer. You might slip and fall or something.
So let's dive into a lot of different things about the market. And so again, this is continuing the trend as we expect, and I hope it ends pretty soon, because if it doesn't, I mean, it's going to be even a darker path where we're going. So first of all, when I talk about things, I like to explain a narrative, and I do not believe, so everyone who's ever gone down through the university route with financial markets or the CFA studies and all that stuff, you might be aware of this efficient market thesis, right? So it means everything is always priced to perfection. There's no knowledge you can have or use to help you make money, because the whole world can do it at the same time. And I do not believe that at all. I mean, you can use certain tools and instruments, and one is sentiment. That's what we're talking about right here.
But wait, Keith, there's weak, semi-strong, and strong. So there's different scales. There's different, just so people understand as far as the.
Yeah, absolutely. We have access to a lot of those tools. So one thing I like to say, what is, and it comes back to something we've been talking about quite a bit now in the Loonie Hour for the last number of episodes. What's one thing that no one's really talking about over the last few days? Inflation. Central banks, fiscal spending. All of a sudden in Canada, no one's talking about Trudeau anymore. Like it's a pretty big distraction that just took place. And this is something that we introduced during the last episode when we talked about all this. So again, I can just share with you what my contacts are sharing with me. And then you have to look at, remember, everything is a policy response. So Putin will do something, the Russians will do something, and then the Americans, / NATO, they do something else. And then the Americans do something, and then Putin will respond again. And no particular order. There's a lot of things going on here, guys. But I always suggest to everyone, just be rational and think here. And the other thing, because of mainstream media right now and social media and, three guys with a shovel in a podcast, we get some airtime to say whatever we want. Everything is amplified to the nth degree. So let's just be very simple here. The sanctions that the EU, the Americans have announced on various Russian individuals, has anyone noticed who's not included?
Yeah, Vladimir Putin.
Yeah. So why is that? You think, if you're putting it together, he might be on the list. He's not on the list, right? So that's just something to think about here. So the way, and then I talked about last week, hey, boots on the ground and stuff. And the Russians, they've definitely gone in on the East Coast. So not the East Coast, so the eastern, is it provinces or territories or regions? I don't know. I apologize for knowing what it's called in Ukraine.
It's the Donetsk. It's the Donetsk region, right, or something like that. Anyway.
Yeah, I don't know if it's a province or whatever. And then they did take out some, some strategic points, I guess, in the military perspective in Kiev and stuff. So one of my good friends is in the business. I said to him, hey, what are the odds of the Americans and NATO responding with any kind of missile strike or boots on the ground. And his exact answer was, what's lower than zero? Of course, I said, well, the ECB's overnight rate, and he laughed at that, of course. But again, these things are happening, and you have to appreciate what is going to be the reaction to it. And if the Americans, if they do start, throwing some missiles and throwing in the air, and then, then this gets escalated to another level. Instead, you're likely going to see a whole bunch of policy responses. And as we get going here, the loser in all of this, no matter if it's the Russians that respond more or the Americans respond more, you always go through a simple diagram chart or outcome. And the loser all the time, it's the Europeans. So the Europeans are absolutely screwed here. So let's just take it one step further. So, I mean, policy response, and let's assume now there's no missiles launched, no boots on the ground, for example, that doesn't happen. So what they can do, for example, let's just say they cut the Russians completely off the SWIFT dollar system. So they're gone. They have no access. You're actually, I think one of the Russian banks got cut off this morning in Europe. So you're getting these kinds of things happening. So what can the Russians do? They can, let's just starve the Europeans for nat gas. Let's cut them off completely. Or alternatively, the Europeans might say, we are not accepting your gas anymore. We're just going to swallow this ourselves. Let's starve the Russians that way. So nat gas is going to be a big tool in the European market coming up. The other, Rich, you earlier said you suggested to buy some Russian assets. I'd be very mindful how you do that, because the logical step remember, this is a different way to fight wars now. It's not always boots on the ground. And the Americans have all kinds of instruments here to do it. So one thing is the SWIFT dollar network, but it's highly likely now in the US, they will prohibit any Russian assets from trading on US exchanges. So if anyone was looking to go along the Russian ETF, think about it.
In my defense, it was before they invaded. That's what I was.
Yeah, that's different. Today's a different story, right?
Yeah,
so
exactly.
I'm just saying that's a policy response that could happen. The next one is no debt instruments can be involved in the US markets. And then the other silent killer, all US credit rating agencies, including the Europeans and Fitch, they are either no longer allowed to rate Russian securities, or worse still, they're told to rate them all an F, basically. So the Americans have a policy tool to really cut off the Russians financially. So again, you have all these things that are coming up. Mutual funds and ETFs can be told they are not allowed to buy Russian securities of any kind. And then all of a sudden, the Russians, they will respond again. So there's a lot of ways to get involved in this situation. And it's very different than you look back to when the Americans went into Afghanistan at 9/11, and then Iraq, about a year later it was. So that's just the opening comments. That, again, these are stories that you're not getting on mainstream media. They're just showing, all the chaos that's happening. And chaos is extreme panic. And I'm not saying that that's good or bad. But in the financial marketplace, to give you an example here, I'm just looking at gold. Gold right now is trading at the exact same place as it was last night before the news was announced about Kiev, being under attack. So again, there's a lot of stuff going on. And a lot of people don't realize as well, like markets don't open at 10:30 in the morning, Nova Scotia time, or 9:30 Eastern. Futures are trading all night. They stop for 2 hours, and you can really get a feel for where things are moving. But go ahead, guys. That's just the initial
you guys
thing to think about.
One of my favorite follows is Pippa Malmgren. I'm not sure how familiar you guys are with her, but so her dad was a advisor to the president, and I think she was a senior advisor to the George W. Bush. Anyway, she's heavy in the finance space, tech space, etc. She's wrote in a Substack here. She calls it "Electrons are the new bullets," and she basically just says that, in her opinion, anyways, and I think she's extremely well connected and extremely intelligent. She views it basically as that look for Russian cyber attacks. So she's like, that could be no more Uber Eats because your GPS system is down. You want to post a video on TikTok, that might not be possible. So she's just looking at it and basically saying the new escalation is simply to turn off the power, GPS and internet. because a lot of these wars will be cyber attacks, and obviously Russia is extremely good at that. So that's about as far as an extent of as my geopolitics goes. But I wouldn't mind turning this conversation into, okay, as a Canadian, I'm sitting here. Obviously, I'm going through my replies and DMs, and people are now asking me, well, what does most Canadian initially think of? They go, oh, what does this mean for the housing market? Right. So I think to sort of unpack that a little bit further, they go, okay, this is obviously happening, continents away from where we are. I don't really understand what it means. Yeah, something's going on in Ukraine, whatever. But like, now what? Like, okay, so we've got, oil running through over $100 a barrel, which is obviously highly inflationary. As we talked about, oil is basically life. It's the cost of energy. So if that goes up, everything basically costs more. How policymakers going to digest this, right? I mean, arguably higher oil prices, an outbreak of war that's obviously inflationary, coupled with the fact that we're already dealing with 30-year highs in inflation, but these central banks really want to be tightening into this, shit show. Let's call it what it is. Yeah. So I don't know, Rich, if you have any sort of ideas. Yeah, I kind of want to unpack this a little bit further, not only for my own sort of knowledge base here, but it is I can't think of a shittier position to be in as a central banker right now.
So, I mean, I think it's a fair enough point, but I think I'm just going to circle back to sort of the way that Keith framed it, which was to say, a lot of this is sort of a distraction. And I think I come at it from sort of a completely different view, but we sort of kind of come to the same conclusion, which is, I think that this is distracting from what I believe is actually, I mean, notwithstanding what's going on in Ukraine. So forgive me for being so callous, but I actually think we're being distracted from what I think is actually sort of a good macro backdrop. And the way I would, the single point that I would look at to sort of as the linchpin, or sort of maybe to confirm my bias, is the 10-year bond yield is still at 195. And I think that if people, and so, yeah, you can look at the markets, and you can look at, all these tech stocks. I mean, I think actually the QQQ is probably flat now, but anyways, you can see the selling off in the futures and all this stuff. But lo and behold, the single most important single line item on my screens every day that, kind of encompasses all of the views of interest rate policy and war and inflation and this and that, is at 194.
Hasn't moved, is what you're saying.
It hasn't moved. Sorry. Excuse me. That's right. And I think that, and I think we're, in a way, I think it's what I'm actually going to do for the rest of the afternoon is go out and go drink in the pub. Because I think in these times, you need to sort of force yourself to pull away from the headlines. Because, I was looking at all the macro stuff, and I understand it's, slower moving stuff and slow moving data. But, the New York Federal Reserve comes out with this manufacturing survey starting to improve. Claims, jobless claims came out better than expected, continues to fall. The German, talk about German. Yes, Germany is very, very vulnerable. I get it. We can go into that a little bit later. But the German IFO, which is, I don't know what the acronym is in German, but it's basically a business survey akin to the ISM, but for Germany, it rebounded last month. And more importantly, there is the supply constraints that they were under, which were extreme levels. We're talking about like basically the highest they've ever been, have come off their peaks. I mean, I could go on and on. I'm not going to, but I mean, one last point, which is just you look at the Citigroup Economic Surprise Index, which is also another important indicator to sort of understand people's expectations of economic data versus what actually comes out. That's positive. And so, you have all these, and then again, circle it back to the 10-year bond yield, which is just ticking along at 194, and just saying, actually, you know what, guys, there are definitely some risks, but global growth seems okay. And so I think it's important for me. I think it's the way that Keith outlined it is really important. Just like focus on what you're good at, what you understand, and what ultimately will determine earnings, margins, and where the S&P 500 is going to go. So that's the way I see it. And back to your question, Steve, is I don't think this is going to change their math at all. I think real interest rates are still at 40-year lows. I think that raising interest rates 25 basis points does not change anything. And I think, frankly, the 2-year bond yield has already done much of the kind of policy work with respect to inflation, interest rate expectations.
Yeah, I mean, I think that's a good point. Obviously, my view is still, I mean, for simplicity's sake here, it's probably very simple, but the Bank of Canada is obviously still going to raise rates 25 basis points here in March. 25 basis points is not going to disrupt and royal markets here. But I mean, Keith, I don't know if you have any additional commentary, because I think we're just, we the three of us have been going back and forth in our group chat here over the last couple of days, right? And there seems to be a lot of discussion around, is the central banker really your friend anymore, right? I mean, are they truly going to tackle inflation? Particularly, we see markets selling off. Like historically, like there's been a debate really that, central banks, do they really have an inflation target, or do they have an S&P 500 target? And obviously, we see markets selling off here right now. So Keith, I'm curious to see or to hear how you're looking at this.
Yeah, so I want to comment on the Treasury yield, where it is, and also on that. But remember though, when we first started having these conversations here about the Bank of Canada, the Fed, and we say, they're not going to raise 7 or 9 times, whatever the Scotiabank number was, because it'll get stopped out for some reason. So it's happening. This is the reason, right? It's coming up. Bank of Canada is up next Wednesday, so less than a week from now. It's their meeting. They're first up, and then
that's going to line up perfectly for the Loonie Hour, which we record on Thursdays. So for a little teaser for you guys next week, we will have full coverage on that. But Keith, continue.
They were originally scheduled to go on the 3rd during our Loonie Hour taping, but they decided to go the day before because they know they knew nobody would watch them if we were recording this. So that's another Twinkie, maybe. But again, like when we make comments to say, the central bank, they'll get stopped out, they're not going to be able to make all these rate hikes. And we said, back then we don't know the exact reason for it, but this is one of the reasons. And again, I'm going to be shocked if they don't raise rates next week. If they do, then I think, you line up to short Canada all day long. If they don't short next week, that's the one.
Sorry, you're saying if they don't hike next week, you short Canada. That's what you're saying.
Correct. Maybe I didn't say it the right way, but that's what I meant to say. Right. So we have that coming here. And again, I think they'll get stopped out at some point. I don't know how many hikes it will be. Rich made a good comment about the 10-year Treasury. And, that's a great barometer used during normal market and economic cycles. And, it was selling off up until a week ago because of the whole inflation expectations and all that story with it. And now it got a bid this morning. So the bid this morning is not inflation related. It's simply a flight for safety. That's where it's going. How this affects Canadians is that, how we've been talking about credit spreads a bit over the last number of weeks and episodes. Credit spreads continue to rise. So that means mortgage rates are likely to continue to rise. So what that means that there are times when you see like the 10-year Treasury yield come down, sometimes it means mortgage rates will come down with it. But there are other times you have to look at the credit spread on top of it. So with long-term rates coming down in the US as well as Canada this morning on the government bond, credit spreads are likely widening. So this gives, so again, which means mortgage rates can stay high and even go a little bit higher. It really depends on how the banks start pricing risk going forward. So again, it's really important in our world to look at credit spreads, and that's where we're going with it. I mentioned earlier the whole thing about central banks. I think it's just fascinating, guys. Like it really is. I remember a few weeks ago we floated the narrative that central banks, if they start raising rates and fiscal spending starts to decline, and the economies are not growing as fast as they were before, it's going to create some challenges. And how can you offset that? And I said before, in the U.S., a strong U.S. dollar a decline 10, 20% in the stock market and whatever other security people are looking at, that does a real good job of slowing inflation. We also know, I know we joke about the transitory effect with inflation, but the economies have to open up again. If they open up again, then that will help a lot with the supply side. So the inflation story, it can work itself out. And, that's what they're trying to do right now, of course, around the world. But the real question is, like, this whole Ukraine situation, does it really escalate from here? And I think the only way it escalates from here, if somebody really, they get an itchy finger and they make a big policy mistake. And let's not forget the Chinese, because they're involved over in the Pacific. And I do not think the Americans will be distracted with the Russians, that they forget to take the eye off Taiwan, what's happening over there. The American Navy fleet, it'll be like 100 Wayne Gretzky's against, Steve Saretsky on his Steve Saretsky in his bear league. I know Steve is good and all, but
still got it.
Yeah, I know.
But
those are some. So again, that the central banks now they now have a reason coming up very soon not to hike rates as aggressively is what everyone was looking at before. And then I mentioned before as well that the big market everyone's looking at now to make money possibly is in the euro dollar market and the Canadian bankers acceptance contract market up here in Canada. Again, it's just a fantastic. Again, if you're insensitive about people's feelings around the world, which as a money manager you have to be, like these are the moments you look at for to manage your money.
I mean, yeah, I think that's always a good point. We've talked about it on this show quite a bit, but basically you kind of have to try to you have to keep your emotions out of it, and you have to try to put yourself in like the central banker's shoes and then say, okay, if I'm a central banker dealing with, a massive debt to GDP imbalance, and realistically, in order to fix this, you have to run real negative rates for a prolonged period of time. You're looking for like any excuse whatsoever to not raise rates. And at the same time, though, is you still have to emit a level of confidence to the general public that you are going to maintain the value of that currency, because that's part of like the social contract, right? I mean, like, you're not going to come out and say, hey guys, we can never raise interest rates again because look at the debt to GDP picture, look how bad it is. You have to sort of, it's forward guidance, right? I mean, I think that's like, so much of this is psychological. So again, Rich, I know you're dying to chime in here, but
well, no, I think we also forget sort of the, like, I don't know, for me, I'd like to just take one step sort of under the hood, because I think we spend a lot of time looking at the S&P 500 or whatever, but there are some sectors that are actually doing super well in relative terms that have not done well in a long, long time. And I think it's interesting to point out, like telecoms, that inflation is, as inflation is bad for some people, it's actually really good for others. For the first time in what seems like a generation, obviously I'm exaggerating, the first time in years and years and years, you have telecom service providers, the Comcast, the AT&Ts of the world, all these people, they have pricing power. That sector is starting to outperform. Doesn't trade has a good dividend yield, doesn't have too much leverage. Same with consumer staples. These companies are able to push through pricing increases and keep their margins high. And so we see a lot of the negative headlines on the Facebooks and stuff, but I think it would do us all a little bit of, I think we'd all do a little bit better if we, instead of spending time on those headline indices and stocks, to go dig a little deeper and look at, consumer staples is good. I'm on the energy like train like crazy, of course, but telecom services, basically a sector that's been just unloved for years and years and years and years, is somewhere where actually these companies are making money and pricing power. And I think frankly, that's irrelevant of what's going on in central bank world or whatever. They're not going to raise interest rates enough to affect inflation in the short term. And so that's just something that I think is kind of fascinating.
Yeah, I mean, that's a good point. I just pulling up a tweet here, but speaking of your sort of oil thesis there. Obviously, it's been doing quite well in this environment. Russia's, I think USA has been relying on Russian oil imports in the last year. And so there's obviously another case for Canadian oil and having that pipeline built, which Biden shut down. But
so on that point though, let's be clear here. The US used to have like a negative current account balance in energy products of like 2%, which is freaking enormous. Now I can't remember the exact number, but it was a lot. All right, it's 2%. Now it's basically has a closed current account balance with respect to energy products. So like, yes, they do import some oil.
Can you simplify that?
So basically, like, think about your net exports, right? So so whether you're exporting versus you're importing. So if you export a lot, and so like Germany, for example, has a huge export economy and they import very little, right? So Germany's current account balance, which is, the last time I got into it, Keith made fun of me for boring everybody, but basically your exports minus your imports and then a couple of other stuff. And if you have a massive current account surplus, it means you export loads of shit. So Germany has has tied itself to a cheap euro, and so has inflated its current account balance. It's a conversation for a different day. But so, and the US basically used to be a massive oil importer, but thanks to Barack Obama and his infinite wisdom, the US increased their barrels per day production from about 4 to about 12. Right, so they're the largest oil producer in the world right now, and they now closed their current account balance with respect to energy, and so they basically produce exactly as much as they consume, and that has changed the geopolitical landscape. I'm sure people smarter about this kind of stuff will tell you it's probably why they don't give a shit about Afghanistan anymore. Who knows? But and so that's why when you read about those headlines, with respect to the US importing, Canada imports oil from Russia too, but there's different things, right? Like Canada produces heavy crude, the US produces light sweet crude, but there are applications that you need a mixture, you need high sulfur content, low sulfur content. There's something called a gravity. I'm not a chemical engineer, so forgive me if I fuck this up, but there's something called the gravity, which is the type of oil that you use. Also, companies have certain competitive advantages when it comes to refining certain types of energy products, whether it's tar or crude oil, jet fuel or kerosene. And so the idea that the US imports lots of oil from Russia is like, okay, sure, but it's nowhere near what it was, let's say 5, 6, 7, 8, 9 years ago. I think as far as being weak with respect to your energy dependence on Russia, Keith brought it up before, which is that Europe is totally screwed out of this. And the reason they're screwed out of this is because their largest economy, Germany, which is about 25% of Euro area GDP, imports, I'm going to read this out here, 50% of its coal from Russia, 55% of its natural gas, and 35% of its oil. And that's because in their infinite wisdom, they closed their nuclear power plants because a bunch of people are basically stupid. And I think that's a much more kind of acute energy dependence thing that we should probably address or talk about.
I think that's a good way to
they invested billions in solar back in the O's, which was all subsidized by government spending. And then as soon as they removed the subsidies, they all went under.
Like you could wrap the show up right there and be like, so the moral of this episode is that Europe and in particular Germany is entirely screwed.
I think the moral of the story is I think we need to be much more cynical about these. Like a lot of these climate policies have geopolitical, like real impact. And I think, you can talk all you want about climate change, but if we're all dead, it doesn't matter that there's, no CO2 in the air. You know what I mean? So like, we need to be like the idea that Canada, for example, here's another one. China produces like 60% of all the rare earth metals in the world. All right. So so what if China does the same thing? What if China invades Taiwan? I know we're speculating here, but guess who has lots of rare earth metals? And guess who guess which other Canada? And up until about 2 weeks ago, we were a liberal democracy that respected the rule of law. And so we should consider, as a country that cares about democratic values, we should consider exploiting our natural resources.
Yeah, I would actually love to pivot into that quickly, because I think this is important. Like, I think why a lot of people are listening to the show, and certainly why I'm such a, avid fan of like macro, because I feel like it's the ultimate like chess game, right? Like there's so many moving pieces, and it's never static, and you're always trying to figure out how the chessboard's going to move and play out. And as you can see, with geopolitics involved here, there's a lot of moving pieces. There's a lot of policy blunders over the years, on the energy side especially. But I wanted to sort of switch gears just on on all the moving pieces. We look at, so we had some big announcements from Trudeau, obviously revoking the emergency power use here in Canada after he basically was a hard pivot. So, we were kind of discussing off air, but I think a lot of this is coming down to, potentially Trudeau having a tap on the shoulders from the big banks, who I would say really realistically, I think the big 5 banks essentially run the country. Let's call it what it is. And this is the problem, is like, you have to kind of like look past like the CBC News headlines and say, okay, like what are the larger ramifications? What are the things that I'm not being told that might impact society or my day-to-day life? Which is that you can't just in a free and democratic country like Canada, you can't just start freezing bank accounts and think that there's zero impact ramifications on a larger level. And so what we were talking about earlier was basically that, if you're a foreign investor looking to place capital, we talked about it in last week's show, you're starting to say, oh, hold on a minute, maybe this isn't the safest place to park capital. Maybe this is going down the wrong path. And go ahead.
Just a quick detail. It's not just freezing bank accounts. Sorry, really quick detail. It's doing so with no probable cause and just on the basis of suspicion. That's it. Loads of people deserve to have their bank accounts frozen. But anyway, sorry, please. It's about having no probable cause, like no judge oversight, etc.
And again, I want to preface this because I know there's going to be people instantly commenting and sending me emails. I don't care about your politics. I don't care if you're left wing, right wing, orange, red, blue. It doesn't matter. What matters here is really the larger macro ramifications, which is financial markets are going to perceive this and say, okay, I have options. You can place your money anywhere in the world if you're these large institutions. And it's like, if you're looking at Canada and going, that's just how it's perceived. And so, Keith, I'd love for you to sort of touch on that, because I think you brought up some good points in the last week's episode, because I think this was a very hard pivot. Again, right or wrong, whatever your politics are, this was a hard pivot. And I think that there was more meaning behind it than what you're probably being told from the mainstream.
Yeah, sure thing. First of all, I just want to one quick comment on the global energy structure. So and again, just get people to think differently about things. So what's the young lady from Sweden? What's her name? That was
Greta Thunberg.
Yeah, absolutely. Yeah, that's her name.
Is she like a Schwab World Economic shill there, or what?
I think she might be a consultant of some kind. However, back to the points that the Rich was making, about Germany, what they have and they don't have, and so that young lady, she was very good at touring the Western world about, suggesting what should be done and shouldn't be done. She couldn't go to Russia, right? Who's pumping all this oil into Europe and coal, of course. She couldn't go to the Middle East. Same thing. Nor did she go to China. Nor did she go to China. And you come up with, very reasons why or why not. But all again, like Steve, the comment you make, the geopolitical world, for people that are interested in it, it's incredibly fascinating. And there's never a winner. Like everyone, there's never a loser. everybody will win a little bit, and that's what's happening with Ukraine right now. You may not be able to see it yet, but in the end, everyone involved would be a little bit of a winner, except for maybe Ukraine, unfortunately. And again, that doesn't sound nice, but that's the way it will likely happen. But again, with the whole energy thing, again, it's the West are going down this one road of ideology. Someone mentioned Obama about helping Americans become energy independent. But that's with fracking.
It was fracking. Fracking is what killed coal.
Fracking is now bad, of course. So now it's because it destabilizes the ground now, right? But my point is, politics, it does have a big influence on economics as it's going, which brings us to Canada. What happened here? So one thing I do love about the Prime Minister here in Canada, he's been very consistent on everything he's been doing, and it's irrelevant whether you like what he's been doing or you dislike what he's been doing. Again, I always look for consistencies, and they just did a 180 on the Emergency Measures Act. Out of the blue, like overnight, they said, okay, we're now going to shut it down, because they were taking crap for 48 hours. Even when they did the vote in Parliament, and what really drives me nuts, remember in Tiananmen Square back in the 80s, the one guy stood in front of the tank, very famous scene, of course. And I think now generations of Chinese, they don't even think it happened. Like they don't think it happened, but it did. In Parliament a few nights ago, not one MP stood up and went against his party. It doesn't matter if they were conservative or liberal or NDP. No one stood up and said, you know what, I think we got this wrong. It's just on party lines. So again, that just shows you how everything is very clear to see. But then all of a sudden, overnight, the liberals, they changed their mind on this. So someone gave them the nod, whether it was the banks or somebody else, but someone suggested to them, we need to change this. And that's what happened, because otherwise there's no other reason for them to change the policy with it. Because what you do in politics, you always float out a trial balloon. You see what the reaction is to it. And from what I saw, there were no trial balloons that went out, to reverse this overnight. So again, everything comes down to money and power. It did happen, which I think it's a very good decision here in Canada to have that not enacted. But we'll see where we go with it. But now all of a sudden we have a leadership now in Ottawa where, okay, what are they going to do now? So now I don't see them as being consistent. And we'll sort of tie in with the Bank of Canada next week. Because remember at the last meeting that the Canadians had at the central bank, we didn't hike today, but we are going to hike next time. What is seen is going to be if they don't hike next week? Seriously, it's going to be a Loonie Hour.
I will eat a Twinkie.
Rich will eat a Twinkie.
I will also eat a Twinkie. I think these guys are for sure raising rates. I just think there's way too much political pressure. But like I said, I think we talked about it earlier on the show here. But I think regardless of whatever the reasoning is, I think we all felt it was inevitable that this talk of 7 to 8 rate hikes from the Bank of Canada just at this point in time anyway seems extremely far-fetched, because things happen. It's a very complicated global macro picture. And
Oh, sorry. Can I ask you both? I want to ask you guys both a question, if it's okay. Which is given how energy independence has been this has been exposed, right? Germany's been exposed, right? They had lots of nuclear power. Now they have none. They used to not import any gas. Now they have to. And I think that this whole energy independence thing, as part of a geopolitical security strategy, has been exposed. My question for you guys is, do you think that there'll be a similar pivot in the sense, we saw Justin Trudeau sort of be exposed, got the tap on the shoulder. Do you think that other countries in the West will similarly get a tap on the shoulder, not from the banks, maybe from the generals, maybe, or from the, I don't know.
I'll go first. Yeah, I'll go. I can see it happening in Canada. I fully believe everything is cyclical, and the political pendulum has been, pretty hard to the left over the last 2 cycles. And it will go back to the right, whether you like it or dislike it, doesn't matter. And when that happens, it'll be a good time to own some real estate in Alberta, right? The king of Kitsilano up there. Look at him.
I've got some comments on that.
There you go. For Europe, however, I think even those, I don't think there's anyone right of center. Is that right, Rich? I mean, I think it's incredibly. I think you need a whole
is very weak. The
generation.
CDU is very weak, and so is the guy from Austria, and then maybe it's the AfD, but they're a bunch of nutters. AfD is the alternative for Germany. It's the right wing party in Germany. Sorry.
Yeah, so I really think out of all this, the Europeans are really
sorry. There's one more in France. There's Marine Le Pen, who came on pretty strong the last presidential election, and then now there's this new guy. I can't remember, but other than that, you're right. I think it's very, very weak.
Yeah, she's out. She doesn't have a chance coming up. I forget that guy's name.
Yeah, me too.
Yeah, but guys, the Chinese, you talk about energy independence. If you have energy independence, you can do a lot of really cool things, right? But the Chinese don't. Like they need energy, right? They need it coming in. Same sort of the Australians as well. So
how many power plants do the Chinese have under construction? Right, like they have like what do they have? Like 26 plants, like
nuclear plants. They have like 100 coal power plants. Like the numbers are insane. I know it sounds like a stupid number,
they are
but
scaling nuclear power plants like fast,
and they're also building coal power plants.
Right.
Mm-hmm.
So much for global warming, building new coal plants. That's why it's like, I don't know, I always laugh because it's like you guys don't know if you know this, I live in Vancouver here, and God bless Kitsilano, and the city of Vancouver implemented a like a climate thing where it's like, if you go to a coffee shop now, you have to pay, they charge you 25 cents for a coffee cup. Or like, even if you go to Whole Foods and you get like a grocery bag, brown bag, they charge you like 25 cents. And their idea was like, well, it's to fight, climate change. I was like, well, that doesn't make any sense. Like, I'm going to go to a coffee shop. It's just a tax. That's all I think. But it's funny because like that 25 cents actually goes back to the business. It doesn't actually go to like a climate change slush fund or something. They're trying to change consumer habits in Vancouver by charging you an additional 25 cents a cup. And I'm like, well, then you've got China building like brand new coal power plants. And I'm like, it's hilarious, man. The political, I don't even know what the right terminology is for it, but
no, it's just when ideology gets in the way of reality. Like we talk about having a healthy cynicism as an investor of seeing what the real world works. And it's ideology. It sounds good. It's virtue signaling. You
virtue signaling. That was the word. Thank you.
Sorry. Yeah. You feel good about something. So you're really having no impact. Sorry. Go ahead.
The funny thing is it kind of blew up in the politician's face, because what happened was over the holidays, it was extremely cold here. We had like a cold snap. It was like -10. It was snowing. And so McDonald's or someone was giving out, I think it was, I don't know, one of the shelters or McDonald's or something. They were giving out free coffee coupons for all the homeless people, saying, hey, it's cold, go into McDonald's, get yourself a free coffee. And so these homeless people were walking into the McDonald's with their free coffee certificate. And McDonald's has said, sorry, sir, the coffee's free, but your cup's 25 cents. And it's like these policies are always just, oh man, it makes you think like, I have almost no faith in government and
or humanity,
or that might be the best way to sort of summarize this whole podcast.
I mean, the thing is, you can do it, right? I mean, a classic example of how you can leverage engineering and science to really cut emissions is the natural gas in the United States. When they started fracking, which is technology, and they started producing lots of crude oil, again, science and technology, one of the outputs and sort of side effects was the access to like kajillions of liters of natural gas. And what's really cool about coal power plants is that they're relatively easy to retrofit, to adjust and tweak them into burning natural gas. And what natural gas is about 50 to 60% less carbon emissions than coal. Lo and behold, natural gas killed coal. It's amazing, right? And now everybody wants to fucking ban natural gas. I'm just like, I want to smash my head against the wall. But like, it's the same with nuclear. I mean, it's just,
did you know that, again, City of Vancouver. They're actually aiming to be the greenest city in North America. Fun fact. So, welcome to my life.
Did you know the largest coal mine in Canada is like an hour away from your house?
I actually did not know that. Where is it?
I'll look it up. Anyway, sorry. Please continue.
Yeah, no. So even like I'm obviously in the real estate space. They implemented like a new policy. So for example, like they're basically trying to mitigate, like implementing gas in new apartment building construction. They want you to be like all electric, like no gas lines. Like you can have a gas stove, but like, gas fireplace. No. Like so they're changing all the building code as well, to kind of phase that out. So kind of interesting. Let's hope to God that electric power and electric consumption, as we start ramping up more and more electric cars and getting people off oil and gas, that, your electric prices don't spike and then you're in another world of pain. But
so there's 3 or 4. It's not the largest, forgive me, but one of the largest is like Ford River Operations. It's 25 kilometers north of Elkford. Do you know what that is?
I couldn't.
Whatever. Anyways, there's like 5 or 6 coal mines in British Columbia. Anyway, sorry.
Oh. Keith,
save us, Keith. Save us, Keith.
Do you have any parting words? I mean, I think we're wrapping up the hour, the Loonie Hour here, but basically to summarize,
let's square the peg here. Okay, so in the world, in financial markets, that's what I do all the time. The sort of the 2 parting memories of the last 48 hours. The reaction to an initial bad event, it's always an overreaction. So everyone is selling everything that they shouldn't be, and they're buying stuff at the top that they shouldn't be. And then as the day goes on and the mainstream media, the rhetoric is no longer so loud because you've heard it all day long. Then things get to play out. And I've said before, like let these things play out as they go. It's not over yet. It really is a game of chess that's going to happen. So the Russians made their play. Now the Americans / NATO, they'll do something next. Everyone has to come out a winner. But in the world, if you're anyone making their investment decisions out there, like don't go reacting. Like maybe on this, I didn't tell a story this episode. I did Seinfeld, I think, last week, right? But do you remember the little guy on it? Who's a bit awkward, George
Newman.
George. Well, he's a character himself, but the other guy, George Costanza. Remember, he had a principle one day. He just said, or a thought. He said he's just going to do the opposite of every instinct that he has, and he started living a fantastic life. Job promotions and his relationships, did a lot better. In the investment world, sometimes you need to do that. Like you just don't overreact, and that's what's happening here. I'm not implying that, hey, all this is over yet, but just as last year, and again, like always think about things from highs and lows. Last year, people were tripping up over themselves to buy in certain parts of the market, and they're all buying at the high or within 5% of the high. And now here we are, like 30, 60, 80% lower from where they bought it. Now they're selling today. Like, hey, the Bitcoin, you call me the Bitcoin guy sometimes, Steve. We wouldn't even talk about it. Like here's an asset that, you think that'd be screaming higher today, but it's not. Like it's down hard. So at the point in time you're holding something that you think is going to do really well for you, it doesn't happen. So does that mean you're running out today to sell your Bitcoin because of this? No, you held it for other reasons, so you should continue to do it. But again, there's reactions out there. So by the way, people selling Bitcoin today is to cover losses elsewhere.
I was gonna say because
yeah.
Well,
that's just observations on markets, right? Market psychology, it's so incredibly important, and most people do the exact opposite of what they should be doing. That's
I think that's a good point, because you brought up like sometimes like trades or the market doesn't necessarily always move in the way that you think it should or it will move. And the one that I kind of highlight the most, I think, is like how gold has traded over the last, like up until more recently here, like the last 18 months. the whole gold bull case was, oh my God, like US M2 money supply was up like 30%. We're printing all this money, inflation at like 30-year highs. And it was like gold was like like didn't move. And obviously now it's picking up here, but like I just think like theses and doesn't always play out the way that you think it's going to play out. So
just one more thing to leave everyone with here. So again, from a market perspective, so the most interesting currency today is the Japanese yen. So earlier this morning, it was reacting the way that it should react, and that as crappy as it is in Japan financially, it is considered a safe haven. So this morning, like everything is red in the currency world except for the yen. Yen is up versus the dollar, right? That's what was happening. A few hours later, I guess now, obviously, like yen is down as well. So it's a pretty powerful move when everyone. Remember I talk about people leave the emerging market world, they run for safety and protection, all that stuff. So all of a sudden, when you have people that are selling yen as well, like this is a pretty big swing. And remember, it's a swing, right? It's not a permanent plateau on anything. But, guys, watch yen. It's always an incredibly important measure, for how serious, capital is moving around. And because capital is one market, it doesn't go back to the other, right? It goes somewhere else. How's that for a mystery, which we'll get into next week?
I think it's a good way to wrap it up. I didn't give my usual intro, which is as always, we appreciate your support, and all we ask is that you share this episode with at least one friend, one person. Just send them the link to the audio podcast, the YouTube link, whatever. Let's continue to grow the Loonie Hour community here. But as always, we appreciate your support. We'll see you next week with a Bank of Canada update and a little deep dive in that. We'll probably have some more updates. Let's watch how this unfolds here in Russia, Ukraine. Many more Twinkies on.
So do we have a bet for next week? Is anyone? I'm going for a hike. Anyone saying they're not hiking?
I think everyone's high.
I'm
25
staying away
basis
from that.
points.
Yeah, I think that's
Does
a
anyone
sucker
want to
bet.
go? Is anyone willing to go 50 basis points?
For 2 Twinkies?
Okay, so unfortunately we're all consensus here is 25 basis points. So there you have it. We'll see you next week.